What if I told you there's a way to actually catch a stock that appears to be in free fall while taking very little risk? My name's Steve Spencer. I've been trading for over 2 decades. And if you're interested in finding out more about these types of trades, click on the link and it will take you to a 2-hour session where I go in depth and my partner Mike Belfiore goes in depth about how to take advantage, find trading setups like this, and how to take advantage of them. Today's video, we're going to look at stocks that have become down quite a bit recently, what many people will call trying to catch a falling knife. There's actually a technique, a way about doing this, where you can risk very little and catch a very strong reversal. So if we can develop this skill of, quote, catching a falling knife, we're going to be able to control our risk, which means risking very little, but with very good upside. Also, if you have some tech savvy, what you can do is you can actually program scripts to capture this trade for you as well. So I'm going to walk you through in the next couple of minutes the details of this trade, and hopefully you'll add it to your arsenal. So here's our trade criteria. A stock that has recently been in a very strong uptrend, meaning in the last few weeks it's moved up quite a bit. A stock that in the last few days has dropped, erasing at least half of that uptrend is the category or is the criteria you're looking for. And then what we want to do is identify an area where it previously had an explosive move. And so today's example is IWM. This is the ETF that represents the small cap stocks. If we look at this chart right here, I believe this is the last month or two, maybe it's the last month. It's just as in a very strong uptrend, went from 160 to 170, and then over the last 3 or 4 days, very quickly came down from the high 160s, 170 area to the mid 160s, and then finally this morning was down around 162, 163. And kind of I highlighted the spot, which I shared in the morning game plan. As you can see here, the little note, support 1 level is 162.5. In fact, I tweeted out this trade this morning when I took it, and it came into this 162.5 level. If we go back to the end of May, it actually had broken out from that level, went up to 164 or so, pulled back, held the level, and then began a very strong uptrend to 170. So that's the big picture view. That's how we kind of selected the stock to trade. Then if we drill down to today's price action, what we can see is, I've highlighted 2 spots for you. The top blue line is about 163.60. It's a price where a couple of days ago it broke down pretty hard from. And the bottom is 162.5. That was the level that I shared for support 1 in the morning game plan notes. Right on the open, it dropped down to that level. I bought there, went right back up about $1 or so. Quite often in the morning, in the first hour, the morning low will get tested. And the very common pattern is when it gets tested, it goes through, it quickly gets back above, closes above the level, and then you'll see another strong green bar. Those are your signals basically to get involved on the long side, and you'll play it to the morning high. And what you eventually would like to see is a horizontal consolidation. It can either be above or below the morning high, doesn't really matter. But once you get that sideways action of about 5 bars and a break to the upside from that consolidation, the reversal has been confirmed and you can consider this a swing trade. And so, walk you through it. It takes out the morning low. Very quickly you see it get bought back up. We're looking at a 5-minute chart. It closes above that, above the blue line. You can initiate a small position there. When you see another green bar, closes stronger, you can do one of 2 things. You can add another 25% to the position, or you can wait for a drop out to the blue line and get full with a stop below the low of the day, or buy a smaller position into the strength at the top of that green bar above the blue line. It's really going to depend on kind of your trading style, how you piece into positions, how you piece out of positions, but that's kind of the basic gist of 2 ways to trade it. And as I said, take some profits into the morning high, and then once you get that consolidation above the blue line there later in the day and move sideways in a small range, that's your confirmation it's a swing trade. And as of right now, it's moved to higher prices. Generally with these situations, you'll take out 25 to 50% of the position depending on how much you've scaled out of in the trade. Quick recap here for you. Recently strong stock. That stock had been trending up for a few weeks, a couple of months. It dropped down very quickly, that trend, erased at least half of it, coming into a longer term support area where it's had an explosive move previously. Buy aggressively into that support area once it's been breached and gets back above the level.